Good morning, good afternoon. I'd like to welcome you to the conference call during which we will present the financial results of TAURON Group for the first half of this year. I'd like to welcome you present here and those online. The results will be presented today by Mr. Grzegorz Lot, the President of the Management Board of TAURON Polska Energia, Krzysztof Surma, the CFO, Vice President of the Management Board for Finance, Piotr Gołębiewski, Vice President of the Management Board for Trading. Michał Orłowski, the Vice President of the Management Board for Asset Management and Development, as well as Mrs. Barbara Hanczak, the Vice President of the Management Board for Financial Affairs of TAURON Distribution subsidiary. My name is Krystyna Łukawska. I'm responsible for communications at TAURON Polska Energia. Let's move on to the presentation of the earnings. Mr. President, please. Ladies and gentlemen, I'd like to welcome you very warmly gathered here, present here, and all our shareholders, customers, and analysts online. We promised a number of things last time. First thing, but we'll make it within an hour. We'll finish within an hour. So we have a very sudden death today. Once we extend over time, we have limits, so I'll be rushing. I will not be speaking that much. We'll leave enough time for questions. Traditionally, and that's the direction we are aiming for, you also asked us to have more time and to present more details regarding distribution. That's why we invited the president of TAURON Distribution subsidiary to be with us. So Mrs. Basia will have some information for you to present, and we are here available also to provide all information you need. What is most important about today is the matter of delivering. The plan is there, the strategy that what we presented to you was, I don't want to say positively received, I don't want to say that, because that's what the earnings demonstrate and the value of our shares and the market cap of the company. But as we declared a year ago, the question that was asked when we will be checking whether we deliver the strategy, I said in a quarter, in 6 months. Most important thing is to deliver what you plan and what you declare, what you promise. So today we'll be communicating to you what we have succeeded in doing for the first 6 months of this year. Of course, also the current situation, what we can communicate and what's guaranteed as ladies and gentlemen. We'll be speaking about the capacity market. That's the first question. I'd like to thank you for that. What was the resolution of the capacity market? What are its implications for our assets? We'll be talking both about the investment both in renewables, in distribution, as well as the gas-fired units, our peaking units that we showed in the strategy as an option. We'll be speaking a lot about the customer. This is our pride and joy. What we do in this perspective about the digitization, about our offerings, for instance, the cheap hours tariff, for instance, what its implication, what its impact upon the price of electricity, about the distribution, finances, and the market situation. I'm looking at the timing. Yes, it's running. Time is running very quickly. That's additional stress. It's good. Ladies and gentlemen, I want to say that based on the outlook that we presented in the strategy of heat decarbonization, the growth of distribution, just transition, the growth, expansion of sales, supply, and the renewables, under which of these directions we have specific projects and initiatives underway. At the same time, we are working very hard on the financing, and Krzysztof will present to you how we are delivering on the promises regarding the acquisition of funds. We had such conferences, but in details we'll show you how we deliver this topic. And what I'm very proud of, and I'd like to emphasize that how we are managing to create a team within TAURON, how we are building the team, how we are building the agreement between the management boards and the employees and the workforce. For instance, at Siersza Power Plant yesterday, the person who had the pleasure to take part in that saw what the just transition is all about. At the time when pure business combines specific money with respect for the workforce, for the people who are employed at those sites. How the new energy, the new world of energy as we define it, takes responsibility for the energy, traditional, classical energy that brought us to where we are at now. Under this item, I want to also say that we introduced a lot of changes regarding our organizational structure for some time now. The company is managed by EGM. That's 15 persons. These are the representatives of the business units, how we set up the organizational system. These are the heads of those business units. And as part of that structure, we take the most important decisions, of course, with all due respect for the code and the governance and so on. I don't want to repeat it. And in addition, key directors are engaged as part of the TPE head office, and this is the group that makes decisions about the future of the company, the strategic direction, about the changes, the cultural changes, organizational changes, as well as the business. This is a very interesting thing and gives us a lot of effects. I want to also say that we place a lot of emphasis on the issues regarding to the women board. Today we have 34% of women who are holding positions in the supervisory boards and the management boards of TAURON Group. Enormous change. We do believe in the power of women. We do believe in the value that they bring to the organization. We face it. We see it every day. So we do believe strongly in that, and we support it very strongly. So, of course, with all respect for the power of the men as well. So it's a full emancipation here. The subject matter provided by women is very good. The women are very good regarding the engagement, and it's very good to be in the organization that's changing in that direction. Okay, that's it. So I report that I delivered the first topic. I made it on time, so I'm handing the floor over to the colleagues. I'm so stressed already now about the time frames that you gave here. I don't know if I'm able to say anything. Ladies and gentlemen, in a very telegraphic pace, I want to cover the generation and portfolio and supply portfolio asset portfolio of TAURON Group, but to give a certain framework, I'd like to refer to the situation in the national power system. Well, first of all, here on the bottom graph, you can see the pricing. The electricity prices are dropping, are declining, mainly on the futures market, which has an impact upon the spot market afterwards. So in a base summary, this is the effect of the hard coal price dropping, the CO2 price is stable, and the renewable share in the energy mix in Poland and this country is going up. This is the reason for the situation. We are happy about that because this gives us the effects that what we anticipated in the entire energy transition aimed at the low carbon economy is profitable, and it will have an impact upon the prices and the situation of balancing of national power systems, mainly European ones. That's what we're talking about. So the national electricity consumption, domestic electricity consumption, is slightly lower than last year in the first half of 2024. However, regarding the production, 1.5% higher production output. We are dealing for the first time with a exports balance. So we exported electricity. This is mainly related to the meteorological situation, weather conditions. So the high output, production output from the renewables, the PVs, along with gas-fired generation means that the electricity is pushed out mainly towards Czech Republic out of Poland, and this 1 terawatt hours of exports, that's the balance we have reported. Regarding the renewables share in the Polish energy mix, it's 28%. It's a kind of constant level, but despite that, we're talking about electricity. Despite that, we have an increase of installed capacity in renewables, both PVs and wind, at the level of more than 17%. So you can see that the capacity balance is not directly translating into the production output. Regarding the negative prices, in the first half of 2025, we observed more than 5 times larger number of negative prices at the top, minus 500 PLN versus the same period of last year. And this will be going up all the time. It will be rising. That's also meant a high degree of redispatching of units by the TSO, by the PEC. This is 40% higher than first half of 2024. We know that this level at the is more than 36% higher than the total dispatching level for the entire 24. And this is the situation that we'll be observing. It will be even getting more visible. In our opinion, this is the way the future is going to look. The decline of demand for coal, 2% in the national power system, also led to the decline of prices of hard coal. Now this price level is about 16 PLN per gigajoule. It became equal regarding PSM1 with the ARA prices. And this means that this possibility of electricity production from less efficient sources is becoming more profitable. Regarding the TAURON's balancing, we increased the production of electricity by 10%. It translates into a 12% increase of hard coal-fired units production. We're happy with that because both in commercial terms we're able to contract more electricity as well as the increase of demand for our capacity from PSC, from TSO, means that we have more forced generation, so we were able to generate electricity from our stable electricity from using our sources. That's what has translated into earnings, and Christoph will speak about that. An increase of the consumption of coal by 10% versus the same period of last year. CO2 regarding emissions also about 12% versus the same period of last year up. I spoke about the redispatching. I want to boast that we as TAURON introduced already last year such a system that in an almost perfect way, because at least 95% eliminates the impact of negative prices on our earnings, on our financial results. So we're able to manage those sources. Therefore, our share in the PC dispatching is about 0.5%. So PC, when redispatching the generation sources, as a matter of fact, to a very small degree, in a small percentage of that dispatching is TAURON's shares. We do it ourselves to anticipate the negative prices. Therefore, the impact on the negative prices on our earnings is minimal or almost none at all. Regarding the dispatchability, availability of the units, the availability rate of those units, it was at a satisfactory level. The main deviations in the availability rate among the conventional units were due to the increased number of planned outages. We had an overhaul of Łagisza power plant. We had a major overhaul there, so it was took a long time, so which meant that this availability rate is lower than last year. Regarding the renewable units, they are the very satisfactory availability rate. We also, of course, we are dealing with a situation where our hydro power plants are partly switched off. This is due to the fact that the production of some of those farms is not profitable, so we're not bringing them back. But the biggest units that generate 80% of EBITDA of the renewables part have this availability rate of almost 90%. Ladies and gentlemen, regarding the supply assets, regarding the supply assets portfolio, we're dealing with a decline of about 9% decline of electricity supply. So the distributed electricity is stable, practically hasn't changed. So we have 26 terawatt hours of electricity distributed, including 2% of an increase in G. But regarding the similar segment, the corresponding segment of the supply, is a decline about 99%. About a 1% increase of G tariff, and the difference in the household tariff group is due to the increase of prosumer production output. whereas the entire decline, the biggest factor behind it is the decline in mainly such industries as like steel making industry, paper making industry, and the coal industry and the automotive. But let me be frank that the big part of that declining demand in the supply segment is due to the rest part of the bilateral trading we are hedging, we are securing. I would like to refer to a very important thing. Grzesiek has already mentioned that. This is the statistics regarding the pricing situation. Average price for 2025 was about 488 PLN. Regarding the spot market, it's 427 PLN. And now, taking into account this portfolio of products, this range of products I'll be discussing in a moment, we achieved a phenomenal result, I can say, by observing the behavior of those customers who took the decisions to choose the products, that if we change the behavioral patterns when they consume electricity to lead to the lower prices, we are dealing with the following thing, that in this first half of the year, we got the price 2% lower than the spot price on average from the customers who are now observed as part of the sample. So we had 416 PLN under the dynamic pricing product. However, regarding the Q2, second quarter, where we got the average price 320 PLN, so 13% below the spot average price at that period. If we're talking about the June itself, and in June we achieved the price, this is a record one, 225 PLN. So this population of customers who are taking advantage of or chose this product, due to the activity cost their price, average price, electricity sales price, to be 285 PLN. Let me remind you, and during that time range, the 436 PLN. But to that price, we have to add all the sales costs. So I think that this demonstrates that this activity of our customers in combination with our product offering definitely pays off, and we are at least almost twice below the freeze price. So a few words about the range of products. Grzegorz gave me some free time to speak about that. This is important. Here you can see on 4 examples, you can see the presentation of the products. I would like to split it into the so-called peace of mind products. That are products chosen by customers who want to have a peace of mind. They don't want to look into their electricity bills for a long time. And the other range of products of their customers who are very active, who want, through their active actions, observing the market and the electricity pricing market and the weather conditions, to want to reduce their electricity bills on an ongoing basis. It's clear that the advantage of each of those products, depending on the situation and the comfort of life, it varies. However, those products are chosen by 90% of our customers. 45% of the customers now we are observing are choosing the products, new energy product, Nowa Energia. This is electricity at a fixed price for 9 years in the household segment, whereas in the SME segment, it's a 5-year fixed price contract. It's a 45% now. Regarding the selections, customer selection, we have 260,000 customers using this product. We already secured more than 7.4 terawatt hours, or more than half of the annual consumption of customers is hedged in the long term, and we have a second range of products. The customers that appreciate the dynamic observation of the market, and also we achieved the situation but also exceed our expectations. We introduced in June, at the end of June, a product, Cheap Hours, and it's a hit product. We have now 12,000 customers applying for this product. Let me remind you that there's a product that for more than 4,000 has a lower price than the freeze price, and the lowest price is 170 PLN in summer per megawatt hour. And this product with a small activity enables you to reduce the electricity bill by 20%. Of course, we have those products, this range of products, that generate very clear results, implications on average prices, but this requires a lot of activity because we do not deliver. Yes, please, excuse me for extending. Okay, this is important. A year ago, we spoke about the fact that at the end of this year, we'll have an option where the customer can go below 400 PLN. The cheap hours dynamic tariff, this is it. The engagement of the customer means that we have specific results, financial results, and what Piotr mentioned, the customers have a price below 400 PLN. Basia, please. Let me provide some important information regarding the distribution tariff. The regulated revenue in 2025 under the tariff is 13 billion 470 million PLN, and year over year, as you can see, it's a 6% increase year on year. If you look at the structure of this regulated revenue, we can see that the biggest item that weighs 39% is the fees paid to the TSO, to the PEC. The next item, 32% our costs of our subsidiary, the cost dependent upon the company, upon the subsidiary, and the return on capital 19% and the depreciation 10%. The key item for us is, of course, the return on capital, because it's the main source of financing our capex. The return on capital is at the level of 2,676 million PLN, and you can see year over year it's an amount that went up most in percentage terms and based on the value itself. It's a consequence of a large regulatory asset base and a bit higher WACC, weighted average cost of capital, up to the level 10.635%. The regular asset base in the distribution is 24,618 million PLN. It's rising versus last year by 2.7 billion PLN, and the additional element increasing this value is 35% of the capex of the current year, so the 2025. In addition, if we can look at our revenue, that in the first half of this year, the tariff-based revenue comparable versus the regulated revenue that we actually performed, 6,770 million PLN. Regarding our infrastructure, in the first half of 2025, we implemented capex of 1,590 PLN, 190 million more than the first half of last year, almost 14% up versus last year. Our capex, the biggest increase is in the expansion and refurbishment of the distribution grid. The funds that we allocate to capex, of course, we are spending it very efficiently, and in the customer area, we increased our renewables grid connection, including microstation, by 510 megawatts up to 7.7 gigawatts. We increased the energy storage facilities by almost 59 megawatts as far as the capacity of the grid connections are concerned. In this 6-month period, we connect about 23 new customers. Regarding expansion and refurbishment, we built 2,200 kilometers of new power lines. We increased the length of medium voltage cable lines by 300 kilometers. At the end of June, the share of the cable lines is 41.6% share. We built 400 new substations, and regarding the remote readout meters, we installed in the first 6 months 460,000 new meters. Of course, the increase of scale of our capex is going up, as the scale increases, when the involvement of our contractors goes up, we as TAURON, we are conducting regular meetings starting from last year in various areas of our company, meetings with counterparties, with the contractors, where we give detailed information about our planned investment tasks. We are providing information about the changes to the technical specifications, our criteria for selecting the contractors. We're conducting an open dialogue during which we are identifying along with the contractors, and we are looking and looking for and eliminating barriers that are happening in our cooperation, and we introduce such procurement strategies that allow us to make the local markets more active. And regarding the customer issues, as TAURON Distribution as an operator, we offer the lowest charges rates for distribution service in Poland. We performed an analysis of relationship between our rate versus the average rate in Poland, and this relationship in each tariff group is below our average. We are between 86 and 99%. What was our approach to that? We selected in each group sudden death, excuse me, questions at the end, so life is brutal. So the final piece of information regarding the customer, but also very briefly, because Piotr already mentioned it, please be merciless. The volume and delivered 26 terawatt hours, stable. The biggest deviation, non-completed volume was in the high and medium voltage groups, and a 3% increase in the household segments. Let me take over the baton. Regarding the financial results, they were very good. In the first 6 months, the revenue dropped slightly versus last year, but 17.3 billion PLN it came in at. However, let's remember in that revenue we also had the compensation payments, and the compensation payments year over year dropped substantially from more than 2 billion 100 million to 650 million PLN. So the compensation payment also are declining due to the declining tariff price, but also due to the number of customers subjected to price freezing have been limited. Regarding EBITDA and net profit, we can boast the historical results. EBITDA for this half of 2025 topped 4.2 billion PLN. And probably some of you can remember that 2020 we're talking about such EBITDA for the full year. So this EBITDA definitely went up, and it's moving closer to the promises that we gave in December when presenting strategy regarding the consensus. So we topped by more than 100 PLN the consensus on the EBITDA regarding net profit. We're talking about the profit of more than 2 billion PLN, and this net profit in this first half of year has not been charged with any write-off. We didn't have any impairment charges related to the coal assets. Let's remember when last year we had such impairment charges booked. Regarding the capex, I don't want to discuss it in more detail because I leave it to Michał. However, the capex came in at 2.3 billion PLN. The net debt to EBITDA ratio is at a very good stable level. This net debt to EBITDA ratio was mainly brought lower due to the increasing EBITDA. Regarding EBITDA, comparable EBITDA year over year, here not too many one-off events happened. This EBITDA, the reported EBITDA versus comparable EBITDA is very close. Last year we had a single one-off event. This was a positive interpretation regarding VAT tax. It led to an increase of EBITDA by 100 million PLN. This year, the event that we identify as partially one-off is the settlement of the G tariff. Let's remember that the G tariff was atypically approved for 1.5 years. So on July 1st, 2024, a tariff was introduced for 1.5 years. So last year 6 months and the full year this year. And this has in fact meant that we have a non-uniform spread of revenue and cost. So the revenue tariff price is uniform of the entire period, where the cost of purchasing this last year was higher than this year. And here we identify an additional revenue for this reason in the region of about 200 PLN in the first 6 months of this 2025. Moving on to the next slide. So here one can say invariably for a long time now, the distribution is our key segment. 60% of EBITDA generated by TAURON Group over the last 6 months. This EBITDA came in at close to 2.5 billion PLN. Regarding the next spots, they change. It just happened when this first half, another two companies, subsidiaries that gave more than half a billion EBITDA was generated by the supply segment and the generation segment. I will elaborate on that later. And the renewables was out of the top three this time. Moving on to the next slide. Here in detail, we'd like to show you which segments generated additional EBITDA versus last year, the first half of last year versus this first half of this year. You can see clearly the distribution generation were the two segments that really gave a big boost for our EBITDA. The others were close to zero or slightly negative year over year. And moving one by one, what factors had led to our higher EBITDA year over year? In the distribution, President Basia already mentioned the higher regulatory asset base is the main factor, in combination with a slightly higher of a WACC by 4 percentage points, led to an increase of a margin on the distribution service. And the other important factor in the distribution is the regulatory account. Let us remember, regulatory account was negative last year. This year, negative regulatory account is positive. What does it mean? That 2 years ago, the volume actually distributed in real terms of electricity distributed was lower than the one approved under the regulatory office. Next year, the situation will be the reverse. But this year the EBITDA is boosted by significantly due to that, because almost 180 million in the first 6 months of this year. Regarding renewables, a simple situation. The declines on the market prices led, unfortunately, to the decline of the revenue in this area, in this line of business, and the drop of the EBITDA. Regarding volume, as Piotr mentioned, is a bit lower due to the weather conditions. So the winds were weaker, the hydrological conditions were deteriorated, but in the meantime we commissioned new capacity of the volume slightly higher year over year. Regarding the generation segment, one can say the very big surprise, positive surprise. All factors had a positive impact upon the increase of the margin. The CDS was better, so the decline of the coal prices, what Piotr mentioned. The second one is increase of the volume, that was already mentioned as well. And the third thing, the increase of revenue from the balancing market. Let us remember that the balancing market in the new dimension was launched in June last year. So these factors had a uniform, roughly the same impact upon EBITDA, positive impact. Additionally, we had a better margin on sales of heat and a positive impact of the compensation from the insurance companies for the damages from previous year, 2022, if I remember correctly. We have the next segment, the heat segment. Here we were dealing with a better result, mainly due to a better volume. The heating season was colder, therefore the higher volume of sold and distributed heat that boosted the EBITDA in this area, in this segment. When the supply segment volume, we also mentioned, was lower, but we cleaned up the portfolio, better margin in the business segment, both in the large caps and SMEs. But negative impact is a higher cost of balancing in the G segment, G tariff, and the one-off event that I mentioned year over year, there was no positive preservation. Of course, it had a positive impact upon the results of last year in this segment. So let's move on to the next slide, please. So the financial debt, as I mentioned, the net debt to EBITDA ratio had declined significantly, mainly due to EBITDA, because we look at the net debt, which we calculate based on the bank definitions, it went up slightly year over year. If we look at the financial debt, this financial debt declined by close to 1.5 billion year over year. What was the main driver? The main driver, as you can see here, was the decline of the debt due to the need to pay for the CO2 emission allowances. This year, in contrary to last year, we purchased a substantial part of the credit at the end of March, beginning of April. I'm talking about the certificates that are due to be redeemed in September of the given year. And this led to the more than close to the 1.5 billion PLN shift on this financial debt. Let me draw attention to one new item. It didn't appear last year, namely the National Recovery Plan. Why I'm drawing attention to that? It's probably not very significant this year, but definitely be significant the subsequent years. And this difference between the nominal debt due to the National Recovery Plan loan and the debt that could be included in the balance. In the balance, as a matter of fact, we look at international financial reporting standards, IAS 20, and we see that the major portion of loans under the recovery plan is very much different from the commercial. So we discounted at the market conditions. We look at the preferential terms, and the difference between both is placed in the accruals and prepayments, and only the main portion of the debt, a certain portion of the debt, is listed as the nominal debt. In the financial debt, we offset this difference, and we show the entire National Recovery Plan loan under the nominal value. So this is the difference there. So we, in the first half of the year, almost 600 million PLN we drew. In the balance, about 200 million is sitting as debt, whereas the other almost 400 million is listed as an item in the prepayments and accruals. And the difference between the net debt and the nominal debt, according to the bank definitions, based due to National Recovery Plan loans, will be increasing in the subsequent years due to the fact that, as you remember, a higher level of funds acquired. But I will elaborate on the next slide. So let's move on to the next slide. Let me show you now what the President mentioned at the very beginning. We are delivering on our strategy. As we promised in December, generally, where the major portion, substantial portion of our funds, 20 to 30%, will be acquired from the preferential sources. We mentioned that our CapEx plan is 100 billion PLN until 2030, and out of that, between 20 and 30 billion will be acquired from the preferential funds and subsidies. And we said that this will be our main area of interest. Of course, later supplemented with other financing, such as project finance and the traditional financings, and in-house funds, of course, own funds. Well, I want to say that only after a few months since we announced our strategy, we acquired the subsidies and the preferential financing at the region of almost 17 billion PLN. Only a few months have passed, and 70% of at least 20 was acquired. First of all, the National Recovery Plan in the distribution, digitization, a number of smaller subsidies also in the distribution line of business, and a preferential loan for renewables. That's the situation as of now, plus the subsidy in quite a new area, namely the construction of production of hydrogen production facility. So as I said, we deliver on our strategy, and we have the right track to deliver it in the financing area. And a small, not important fragment, first historically in the history of TAURON, the project finance, we probably will not only be focusing on the traditional financing, but some of financing will acquire under the off-balance sheet formula. And over the last few weeks, we signed the first agreement based on project finance. We took advantage of very beneficial, favorable market conditions, and we signed the financing in the renewables for slightly more than 200 million PLN. First finance projects. That's all from me here. Let me hand over the floor to Michał, who will speak about the CapEx. Krzysztof delivered 11 minutes on time. Okay, regarding the CapEx, our investment outlets went up year over year by 23%, up to 2.3 billion PLN. Our biggest and most important segment from the CapEx point of view remains to be distribution line of business. The details of distribution was elaborated upon by Basia, so let me move on to the renewables. Here in the first 6 months, we invested about 400 million PLN, out of which 60% was allocated to the construction of 3 of our largest wind farms, that I will elaborate on in more details, and the construction of 2 PV farms that we spent about 25% of the CapEx in this line of business. Year over year, also the generation segments capex goes up. Here we are dealing with a natural overhaul cycle, and the components required for the overhauls of the units. This year we are dealing with an overhauled Jaworzno 910 megawatts and the capital major overhaul for the second largest unit in Łagisza. It's a part of a certain cycle. So both this year and next year, this capex will be higher than in the historical years due to the fact that last year we also have a planned major overhaul of the Jaworzno generation unit, which will require higher spending. Regarding the heat segment, here about 50 million PLN capex, mainly the completion of the up to now investment project, as well as the network-related projects. In the next year, probably this will accelerate, especially with the big investment decisions regarding larger sites we are facing now. We are at the stage of preparing the commission. They will be launched next year. And the last one, supply and the other segment here, in total 140 million PLN, the biggest portion being the IT and customer service investment, and the lighting in the region of 30 million PLN. And now, regarding our largest investment projects in the renewables line of segment, let's start with the Nowa Brzeźnica project. This is about to be completed, this project. The installation of the turbines has been completed. We got the occupancy permit, so we are acquiring the so-called AOM, so the operator from the temporary operator for the operation of the installation connected to the grid, and we assume that the project will be completed in Q4. We are at the final stage. Sieradz wind farm, a similar completion date, Q4, but closer to the end of the year. Here we have 6 out of 8 turbines already mounted. The other 2 are being mounted now. Then move on to the technical acceptances, the occupancy permit, and here we are planning to complete this process this year. The Miejska Górka wind farm, this is our largest project, launched last year. Now we are at the stage of having completed the full foundations. We are about to mount the turbines. We assume that mid-October this process will commence, and the completion date is scheduled mid-year 2027. Regarding the PV farms, the Bałków PV farm, we are at the stage of a final finishing works regarding the access roads and the site. We are acquiring the final permits soon, and the Postomino PV farm also, we have the occupancy permit from the construction side. The final permits and the project will also be completed at the end of this year. However, what's important, we launched 4 battery energy storage facilities. Probably the scripts are not very impressive, but for us very important. First of all, due to the testing of certain contractual solutions, we managed to contract those projects at a competitive price. These were projects that could be quickly connected to the grid below the procurement law threshold level, and from a personal point of view, we'll be able to test the management and the maximizing of operating margin on such investment projects, and we'll have more and more of those investments as time goes by. But we wanted to do this proof of concept early and to test the commercial operation management of battery energy storage facilities, and we launched several projects will be commissioned Q1 next year. Regarding the strategic options, you can't see everything in capex right away. A lot of things are happening ahead of time, so we want to show you the outlook for the implementation of the options that we outlined in the strategy. I already spoke about the renewables project in the previous slide, but in strategy we also indicated a very big option regarding the energy storage facilities, the picking and backup generation unit Rożnów 2. We have completed the basic engineering design. We have a general design. We have a better estimate of the capex for this project that could come in at more than 6 billion PLN for this project. Hopefully soon we will get the grid conditions and grid connection condition, and we'll be moving on with the next steps of this investment project. We also have secured all of the land for the main installation, so we do assume that this installation could get the investment decision in 2027 on the condition that the support mechanism will be in place, will be sufficient for this project to make it sufficiently attractive from its profitability, because the level of capex is very high. What's very important regarding the heat segment, we filed a request for 187 megawatts grid connection in the power to heat technology. In our case, these are electrode boilers. So the logic is we want to have warm water, hot water based on the electrode base. So we use the cheap power from the PV stabilizing system, fill up the energy storage, and then use the hot water to the final users during the summer season, taking advantage of the low electricity prices. But the majority of the investment decisions in this segment that we mentioned in the strategy will be made in 2026, especially the biggest units Katowice, Łagisza, Tychy, visa the investment decisions next year. Regarding the generation segment, here we indicated that we'll prepare the option of transition for this segment. The biggest option from my point of view will be the construction of the peaking units. In our case, we chose the OCGT, open cycle gas turbines. We have the grid connection conditions for the units 1400 megawatts, the 600 megawatt unit in Jaworzno, the 400 megawatt unit in Łaziska, the 400 megawatt unit in Łagisza. However, the launching of this project will be dependent upon the acquiring of a sufficient revenue from the capacity market to make sure that they are economically profitable. Whether it happens, it depends upon the final decisions and the final parameters of capacity market auction. But however, this option is ready from the point of view of grid connection conditions. We also acquired at the generation source siting the grid connection conditions for facility energy storage facilities. We also talking about the SMRs. We are talking about considering 8 sites for this location, but we assume it's going to be 1 or 2 SMR projects. Also, the electrolyzer project for Jaworzno, we are preparing, but we got the 240 million in subsidies. In our strategy, we indicated one of the important elements for the renewables is the acceleration of in-house development projects. Looking at the implementation of the strategic objectives, now we have a gap in all technologies. However, first time we are showing also our pipeline of projects under preparation using our in-house resources, and we can see that this gap does exist in all segments. However, the projects, especially regarding the wind projects, whereas PV projects and the energy storage facility projects, we have a big portfolio in-house portfolio that can implement a large portion of our strategy. And moving on to the details of our pipeline of projects under development, we have 3.6 gigawatts of projects that are currently in our preparation portfolio. Majority these are the energy storage facilities. We also have about 400 megawatts in wind projects and more in the PV projects. What we did recently is increase the capacity of our team preparations, procedures, checklists. We got solutions, system solutions that can enable us to scale our own development. We can in-house development. We see some effects already, but the key is to increase the number of wind projects in our pipeline to meet our strategic obligations, commitments. I promised to return for one slide, the outlook slide. So far we have showed to you the outlook only once a year during the full year earnings conference. This year we decided to change the up to now practice, and we decided to show what's the view, the outlook of our group, the EBITDA outlook and the ratios after the first 6 months. And here one can let me draw attention to what has changed versus the previous outlook. And now taking into account the earnings in the generation heat lines of business, we changed the direction of those arrows, especially in the generation. We do believe that the EBITDA year over year will be better. Here, all the factors that I mentioned when I spoke of before will be the same for the full year. So the CDS issue due to the decline of the fuel prices and the issue of revenue generated from the balancing market in combination with a better volume, in our opinion, will allow us to achieve better EBITDA year over year. And the second issue is the heat segment. Here also we are improving, maybe not going straight up in this area, but from the expectation of a decline in this segment, we expect EBITDA to be stable, to be flat year over year, especially due to the volume that I mentioned, the lower outdoor temperatures in the heating season, and thus the better results in this segment. Effectively, EBITDA for overall for the group should be better, and thus the net debt to EBITDA, we do believe that we're going to be close to being flat year over year. So much regarding the updated outlook. The other things practically haven't changed. The only thing that we have changed is the expectation regarding the supply volume. It's lower, but as Piotr mentioned, but it doesn't have an impact upon the deterioration of segment itself. It had an impact. The balancing issue or balancing in the G segment had an impact upon the earnings. So that's all regarding the presentation. It seems like we made it within the promised hour. Yes, delivered. So 51 minutes. I do hope that the shareholders, investors will appreciate that. It was ideal. Okay, one more thing that is highly important is regarding the issue that Michał mentioned regarding CapEx projects very courageously, and we seriously treat the local impact issue. We are looking whether the projects that we do, we try to do around our core being the distribution grid and the places where our conventional energy is implemented. So for each site of our conventional energy projects, we have prepared it, and it's working the development project for the new energy world. So Łaziska, Jaworzno, Łagisza, Siersza. In each of those sites, we are working today in order to be able to take part in the 27-28 capacity market auction. This is competition to win it, but irrespective of that, we know that past beyond 28 is going to get more and more difficult. Therefore, my colleagues mentioned already, this year, very specific works are being carried out to build new life there, so that the new world could replace what's there today, so that the local community could have a job, so that people could work, on the other hand, to develop business there. This is for us is natural, and this is applicable to the Upper Silesia, Małopolska, Lower Silesia, where we are implementing an enormous project of upgrade of a Piechowice Dam that combines safety with the business, being the production of electricity from the renewables, hydro in this case. Let me put it this way, that we are showing the economic result, the financial results of the group. They are very good. Sometimes the questions are why these results are so good. The good earnings mean that such companies is able to invest. That's a natural thing. If there are no good financial results, automatically it has an impact upon the investment capabilities. So the fact that we have good financial results and they are stable gives us a chance that we can build economy not only in Poland, first of all in the areas that we operate in. This enormous impact, but any money that we spend on the distribution grid, and 99% goes to the local businesses. All the services buying the distribution grid in the heat or generation, this is a supply chain of local businesses, and this is very important. So if you look at the financial results that we are showing, numbers, EBIT, profit, it's very interesting, but please take note of the fact that during that time the actions related to the customers are performed. Very interesting questions, when Piotr will have a very nice challenge, but this is the matter of improving the customer service, the investments in customer service, enormous systems, new rates that are much lower than what was offered before. This enormous investment in the distribution line of business. This is the work related to the flood safety solutions in Lower Silesia. These are the programs that we are launching for the human resources development, our workforce development. Today, that's one of the most important projects that I have on my shoulders, the workforce development, so that this company could operate not only in the subsequent years, but also over the next decades, because the best investment that we can make in the competence and the engagement and the developing the corporate culture that will be long-lasting for years. This is a matter of people, human resources, and also this just transition. As you look at that, if we took part in the capacity market auctions, we take into account of issues not only related to money, of course, that has to be in place always, but also issues related to the Poland's energy security. We also take this into account, and the issues related to the fact that the transition that we are implementing could find social approval. This is quite simple and clear, but electricity generated by people for people. Without the social acceptance, society's acceptance, we cannot implement the transition. The social transition requires the social acceptance. People will follow us if they see that we deliver on our promises and we convince them. The examples of our meetings with our workforce on the hydropower dams, on Łagisza, and yesterday in Siersza, means that those people, when they see the plans, they understand those plans, and they can see that we deliver on our commitments and then follow us and help us. So this is a highly inspirational thing, a new experience that we also gained over the last year, and that's what I'd like to leave you with. Thank you very much. Thank you very much for the presentation. Now the time for questions. First of all, I'd like to ask the questions from the persons present in this room, and those who are online, please send your questions via the form available on the website. Probably some have already been sent. Bartłomiej Sawicki from Rzeczpospolitej, I have several questions. In the management board's report for the first half of this year, we can read, although later it turned out what I missed in the report for the full year last year, that out of impairment tests of the generation units, you are planning that the Jaworzno power plant will be operational until 2040. Let me remind you that the capacity market is valid until 2035. Łagisza until 30 years. I can remember the capacity market doesn't include 29, 2030 regarding this power plant. I want to ask, where is your optimism coming from in your saying that these power plants will be operated for so long? And regarding the capacity market, you have managed to contract everything that you submitted, but did you submit everything that works until the end of this year? So which units out of the 4 sites will be shut down by the end of this year because you simply didn't report them, submit them for the capacity market auctions? And also I'd like to ask about the issue related to the cost of balancing the renewables. I'm talking about here the cost of the production profile and the system cost. Your market competitors are estimating this currently at the level of 120 PLN per megawatt hour. Regarding the renewables, I wanted to ask, what is your situation, what's your point of view on that? Thank you. Let me start. I'm going to hand over the floor to Piotr, unless you want to start. 3 questions. The topic regarding the optimism regarding Łagisza and Nowe Jaworzno, you were right noting that the capacity market we have shorter than the period of operation that we assumed. These are, let me remind you, high efficiency units, and taking into account our analysis, we think that they can economically generate electricity as they do it now. The support from the capacity market is not necessary here for such a unit to make money, to cover its costs. That's the answer to the first question regarding the capacity market. Here both the questions that we can see on our screens and yours are interrelated. We submitted 10 units to the supplementary auctions, and within our strategy of using those units, here I take into account our backup units. None of the units that has not been submitted to the auction will not be liquidated. That's the answer. And to add, behold, in front of our eyes, a slide regarding the revenue contracted under the capacity market. We contracted 3% more revenue for 2026 than in the year 2025. We have 5 auctions, a lot of auctions, so we have additional supplementary catch-up auctions, second supplementary in the main auction for 2030, so the activity is very high in this area. Now analysts have a hands full to complete these tasks. So far we've been successful. Let me just add, there was a question about Łagisza. It's worth recalling that Łagisza is a large 460 megawatt of installed capacity, so the fixed costs per unit are much lower. But first of all, it's a unit that was also has an added heating component that has in fact is a combined heat and power plant and feeds the entire system between Mrągowica, Będzin, Sosnowiec, Katowice and Chorzów. So it works on a large district heating system that has a large load, and therefore it operates in the cogeneration mode for the majority part of it. So economics of that is closer to the combined heat and power plant than the strictly system power plant, and for the needs of the heat generation it will be operational until 2030 and subsequently will be replaced with a cogeneration gas-fired unit. That's our investment plan. That's why the economics is different than for a classic traditional system of 200 megawatt units. And with 110 megawatt units, worth mentioning that we do not assume that the power plant will generate a major value between 2035 and 2040. We had a lot of discussions and on that regard. Technically, this unit can be operational much longer, until 2060. We have KPK, where a certain portion of generation from coal will be continuing. This is the highest efficiency rate in Poland at the gas level. So from this point of view, it could be the last coal-fired unit shut down in Poland. 2060? Technically, it doesn't mean that it's going to be operated. In the conditions permit, it could work longer. From the economic point of view, we're limited to 2040 as of today. But if it was to be shorter until 2035, it will not have a major impact upon its value, because you assume that this power plant will be generating major additional inflows in this area. What Michał mentioned, let me just confirm. If we looked historically at the impairment test, historically, they were supposed to operate until 2060. Then in early 2024, we limited the durability of the economic life cycle of this power plant in 2030. We discounted the revenue until 2040 and 2035. It will be very similar. So irrespective which year we picked, the results in the impairment tests will be very similar. The difference will be very small. So that's the answer. But we assume that those the highest efficiency rate units will be operated in Poland until 2040. That's our assumption. Cost of balancing for a PV farm is 50 PLN per megawatt hour, and for wind it's about 15 PLN per megawatt hour. If you were kind enough to give more details, if I'm not sure if I understood correctly the pyramid of dimension, I mean here the cost of balancing the production profile and the cost for the system. Let me put it this way. Regarding the cost of the profile of the farm as one parameter, and for the system, it seems that it's in the region of 50 up to 100 PLN per megawatt hour. I don't have detailed information, but what's the number for our fleet in this regard. Thank you very much. Next question, please, from the audience. Paweł Puchalski, Santander. Let me start with the question to the CEO. So 60 billion by 2035 or 2040? I misspoken. I confirm what the strategy said. So once we know it, so it's one must notice that up to now the capex spending are not overwhelming. So are not dazzling. So question to Mr. President, so what increase in regulatory asset base and what weighted average cost of capital you expect for next year? I saw in the presentation this year you took into account 1 billion, which is 35% of next year's spending, which would suggest that next year's spending is 2.8 billion. So that's what the arithmetic says and your slides. So we are getting lost here. So please ask next year's regulatory asset base and next year's WACC, some early estimates. Well, let me respond to that. WACC that we have guaranteed to start with, we guaranteed the minimum level is 8.5%, the base is 7.5 plus a 1% premium for reinvestments, and the level of this WACC is dependent, of course, upon the capex agreed upon with the President of Regulatory Office, Energy Regulatory Office. So we are in the process of agreeing upon the expansion plan, development plan, and I think this level we know once we approve the tariff for next year. Regarding this capex, 35% of capex, this was the value of 35%. This is the capex that we have in our expansion plan, but in the 23-28 plan. These are the amounts updated. At least we applied for such update in the new plan. Okay, to further questions and how difficult it is the position of the companies in this situation. I will not be pressing on with this topic. So understand that 1.4 gigawatts of CGT, you will take part with that. You submitted in the December auction. And the second question, whether development, because you're showing the percentage of the expansion of your renewables capacity, is it equivalent to the capex spending, or do you have divergent ways? You account differently for how Miejska Górka 33%. So that means that 1/3 of the capex was spent, or you calculated differently somehow. Okay. Regarding the gas peaking units, gas-fired, from the permitting point of view, we are ready for certification. We can take part in the December auction. The final gateway is the payment and the auction deposit payment, which takes place in November. So by the time you need to make a decision, the projects are ready to take part in the auction if the expected conditions are for us sufficiently attractive and we have such option. We are ready to take part in the auction. Regarding the work progress, well, I would have to confirm. Basically, it's based on the outlays. That's what you pay. Also, spending reporting. Some advance payments are also included in those projects. So, in fact, from the spending point of view, this progress is higher for the renewable projects. From the outlays point of view side, it reflects the elements that already assets. Let me confirm that in the renewable segment, due to the fact that you have to order ahead of time the turbines, it's advance payment. So, generally speaking, the spending is not equal to the outlays. In the distribution is a very similar level, up to within 100 million PLN for distribution capex. However, in the renewables, the difference is several hundred million PLN, 300, 400 million. The work progress could be in place, cash versus outlays. Now we have 400 million PLN difference of the first 6 months. We have more spending than outlays. And the final question from me to Mr. President, because after Q1 there was a statement made, if the subsequent quarters are solid, then we'll consider accelerating the payout of the dividend. So we can see how you're boasting, how good results you have. I do not expect anything bad in the subsequent 2 quarters. Understand that dividend in 2026, we can already discount it. And put it this way, that at that time I said that we'll be considering, and I promise we will be considering very seriously. Listen, we spoke before about the fact that the ambition of every manager that runs such a business as ours is the ability to persistently pay out dividend. This is the best encouragement, best incentive for shareholders and customers to invest and link with this company. So I uphold our will and dreams, but I cannot give you in such a direct question. I give you a straight answer, but we are considering very strongly, and this is definitely our ambition, managers' ambition. Thank you. Good afternoon, Piotr Dziowski from Citibank. I have several questions. The first question regarding the accounting treatment of National Recovery Plan loan. It's a very interesting debt. Once you spend it, can I assume that you'll have 5 billion PLN coming into net debt and 10 billion will be somewhere in the prepayments and accruals, and next to that 10 billion net in fact will be not have an impact will be shown in the net debt to EBITDA ratio. And my question related to that, so in your strategy you showed 3 times the ratio. At that time you had in your back of hand those 10 billion PLN. All of a sudden you found this 10 billion PLN space that you can allocate to something else. Not to link it with a question that was posed by Pavel. Do you have all of a sudden 10 billion PLN in your balance to be spent or not? Let me answer. First question, theoretically, it may happen so, but it's not obvious because, as I said, we are looking at the current interest rates difference. So if interest rates are declining, then the difference, of course, will be declining. So we cannot ahead of time assume it's going to be the same ratio, but the method will be the same. So generally speaking, a major portion of that will be an item under the prepayments accrual. So I confirm, but in numbers, there could be a difference. So regarding the less than 3 times, if you said 3 times, you had this 10 billion PLN, you're realistically thinking about the addition of 3.5, or now you'll land on 2.5, we have room for on the balance. Generally speaking, of course, in the strategy we're thinking more about the, in this case, about the financial debt, not the entire economic debt as we present against, including the CO2. However, more we're thinking about including the nominal amount of the National Recovery Plan debt. I have a completely different question about this picking and pump storage facility. How big will be the capacity of that pump storage project to make it profitable to spend the 6 billion PLN? How many times you have to turn it over? What spread you need to generate so that you to make a commitment to spend 6 billion on this pump storage project? Regarding the capacity, we are at the stage for which we have the minimum and maximum capacity of a tank, of a reservoir, but we have ahead of us the geological test. It's mainly the moving of land masses, and that's the project. Depending upon the rock structure underneath, then we'll adjust the size, but the order of magnitude is more than 3 gigawatt hours, between 3 and 3.5. That's the range that we can speak of realistically in the most probable variants, but our final knowledge will be there once the geological tests are finished. We're looking from 2 sides, economics of the project itself, but also looking at the relative economics versus the lithium-ion batteries. So here the batteries are significantly cheaper technology. The pump storage power plant also has benefits, but what would make this investment decision easier would be to close this gap. We can see in Western Europe discussions in place, and the long duration energy storage support schemes moving beyond the batteries horizon can be heard, and discussion about the support mechanisms and the solutions that we present in the new capacity market. So in the past 2030 time frame, it's of key importance for business program to be doable. So we have quite a lot of strong interest from foreign investors. It's a large investment project, so relatively bigger. And they did not want to do single wind farms on onshore wind farms in Poland. I also interested in the support system, the financial solution, and the support mechanisms past 2030. We're talking about a longer construction process and commissioning roughly around 2033. So before the investment decision, we'll have a little question marks resolved. Final question to give more time for my colleagues. I'd like to ask about your opinion of the PV market. you can see that something broke on this market, and various developers are much more cautious than they were 2 or 3 years back. In your presentation, you are showing that you want to build the capacity, developers' capacity. Is it possible within the structure of a state treasury company to compete against the fast-running independent developers? How do you see with a share? With a share of the state treasury? Cost of generation, the megawatt. That's my first question. And the second one, whether you have second thoughts whether to develop this pipeline and to invest in the PV business. And well, let me start, and you will comment as well afterwards. First of all, regarding PV from investment point of view, that's true. We can confirm there's an oversupply of projects. Few people are buying PV projects. The prices for the paperwork dropped 3 or 4 times versus what we observed 2 or 3 years ago. So that's true. There's an oversupply. We can see that as well. So definitely we'll be cautious here. Now we are trying for our PV business, first of all, to take advantage of in-house development with some synergies, look for preferential solutions from the financing point of view, so that our PV project that will be developed, even with price trajectory paths that assume further deterioration of the profile, could remain competitive. What you can see in parallel, there's a small load from the procurement for the sector. CapEx is declining. Once the lithium and iron batteries come in, they can ensure a certain stability of the spreads in the system. So we are not big enthusiasts of PV, but the projects that we have ready from our in-house development with the use of the preferential financing, we can see that they could make sense. Regarding in-house development, I think, are we able to be flexible enough? I think the market regarding in-house development is changing, namely the projects that have the grid connection conditions already issued, 70 gigawatts, energy storage facility about 50 gigawatts, so it stops being a rare resource. In the short time we demonstrated that we can deliver in-house development project to the ready to build, more on a larger scale to the energy storage that 170 megawatts that won the capacity auctions came from in-house development. Further 500 megawatts we obtained on the generation side. So we are able to develop those projects, but we can see that more and more important, both for the persons that lease the land and for local communities, is a matter of social dialogue and the probability of completion of investment project. From a technical point of view, when we start the development of a wind project, we are paying a small upfront fee, or we pay nothing, and we are promising the person that's leasing land to us that will pay them a lot of money once we physically start the construction and once then the farm is operational. And from the point of view of such a person, of key importance is the fact that the entity that's on the other side makes it probable that we'll reach a certain point which will ensure further cash flow for this. So in this respect, I think we are an entity that could be much more stable, a much higher probability we guarantee. The second thing is the social protests that in case of wind farms are becoming a more and more bigger problem. It's a matter of convincing the local authorities. Also protests regarding PVs also started to appear that 2 or 3 years ago didn't exist at all. So we can see that we believe that we are able to be an entity that is able to, in a better way, to convince the local community, to demonstrate that we are able to carry out sustainable projects and to be an active part side in this social dialogue. So we have this competitive advantages here, but from a point of view, we try to ensure sufficient scalability, flexibility of the solutions, and the condition that will not be far from different from the market condition, and probably will not be that aggressive in bidding for plots, but that's not the point. At the end of the day, our development is to make sure that the larger portion of the value creation for the entire renewables project will come to us, and we try to do that. We have to make sure that we choose projects that we enable the optimum mix and are based on our competitive advantage. And let me be frank here, but we'll be looking for partners here. Let me invite you on the 23rd of September. We are signing the letter of intent with KOWR regarding the cooperation regarding the land that KOWR has regarding the development of wind farms. So we can see certain competitive advantages that we want to base our operations on, and we believe we can win in this segment. Let me just add to what Michał mentioned. It's worth emphasizing how the capex dropped for this project. I think within 2 or 3 years, the capex went down by half on the PV projects. It's a big change on the market. Second thing is the fact that there is a couple competition opened under the National Recovery Plan. There was possible to submit petitions for financing for the renewables project, of course PV and possibly wind projects. And let me just say that TAURON has actively submitted as many petitions as we could. What will be the final outcome, we don't know, but it definitely help the economics of finances of this project. New industry question to 2 questions. To President Gołębiewski regarding, if I understand correctly, due to the results of a supplementary auction, TAURON by the end of 2026 at least will not shut down any coal-fired units. But let me ask, how many coal-fired units you had? What capacity that could have lost the capacity market as of the end of 2025? How much of that has been submitted to the supplementary auction and won? And as a consequence, and how many are still left of those coal-fired units outside of the capacity market that will stay out as of the beginning of 2026? And to Mr. President Hanczarek, a question regarding what, roughly speaking, is happening in the grid, in your grid regarding the renewables grid connections. What was the level of connected capacity as of the end of June? If you remember, if you have such data, what may happen further on, how many active connection agreements were signed but not implemented, what capacity, and the grid connection conditions, what was the capacity under those conditions already issued. We submitted 10 installations referring to the level of profitability topic that is a precondition for further operation of a unit. As you know, all of the units under this auction, except for the DSR units or the price taker status, so none of those units could not leave the auction before the price taker. So it was 307 PLN, that was the level of the auction, priced 340, let me just check, 6. Therefore, fourth round, supposedly some units, DSR units left, which enabled closing of auction. From my point of view, everything that we submitted, one will have a capacity contract, both our units as well as the other units. Our units is 1567, and 4 units are left, but will be providing backup. Let me remind you that the 4 units that are in place, it's depending upon the strategy of dispatching the units. Let me remind you, for the 2026 auction capacity, we have other units available, but I mean here the ones that they lost, they didn't win. 4 are left without the capacity market, correct? So what's, well, the total capacity is, I think one important thing. By definition, we do not submit all of the units for capacity market that have to be left, because there is some backup, some reserve. About 2 gigawatts was submitted. 4 200 megawatt units, not full, because without capacity market, but they it is planned, it's going to be repeated sequentially for 2028. If nothing changes in our analysis, that those 4 units we foresee will be backing up the units that are under the capacity market, so we'll be able the shifting of the obligation will be able to use them. Then 910 unit as well, and we have 4 units that by 2028 already have capacity markets. These are the upgraded, refurbished units that have a 5-year capacity markets since 2024. Regarding end of June, micro installations, we 467,000 micro installations with total capacity of 4.2 gigawatts. The total entire renewables, including, I already provided it, let give me a moment, on the slide we gave this information, 510 entire renewables in the first half, up to reach 7.7 gigawatts at the end of. But I don't have information about the grid connection conditions, exact date. Thank you. Talk about the write-offs on coal. We didn't have them as of the first 6 months, and conditions do not change until the end. So I can assume that as of the end of the year there will be no impairment charges. That makes things more probable. There will be no reason not to pay out the dividend because there will be a net loss for the entire year. That's one question. Second question, what's your understanding? What will be the change of the capital market beyond 2020? We are talking about the substitute mechanism, or do you have any opinion on that? What may be introduced and how it will change? What will be its impact upon your cash flow versus current years and beyond 28? Thank you. Well, regarding the impairment charges, as we said, the major impairment charges were booked in previous years. The main balance value is the new Jaworzno. We're not talking about any change because the capacity market has changed. It will not change until 2035, of course, changed by based on inflation. However, the other coal units, the 910 megawatt unit, we also measure the market component. So a lot depends upon the envisaged price trajectory paths in the subsequent years. So if capital market doesn't change, nothing will change regarding the impairment charges, but the market is relatively stable. I don't want to determine the decision makers as of the end of the year will be impairment charges or not. Definitely the impairment test will be conducted. However, the major portion of those assets have already been written down. As you said, if you look at the balance, standalone TAURON balance, the share of those subsidiaries have been written down to zero. There's only the loan value, but for the assets, we're looking at the consolidated statements. It's 2.8 billion PLN, and the gross amount is of that is gross portion of that is the Nowe Jaworzno. We all would like to know what's going to be like. A lot has been talked about the substitution. For us, in the strategy will align with what is going to happen. On one hand, what we're discussing now and thinking about now, and it's nationwide, as a matter of fact, the next 3 years that we already have established, it's a capital market is clearly laid out until the end of 2028. Subsequently, there will be a capacity gap there. So depending upon what will happen on the supply side in the near future, I think the discussion will be conducted about the 2030. We looked at our assets. We are able, commercially of course, to provide such service, not defined in our strategy, but we are looking at the first supplier. You can always try to trade if it's okay. That's one view, one point. However, we are counting on it, and from my point of view, it will be interesting solution. If there's a demand for the service of such units as our 200 megawatt units, then that you have a system, substitution system, substitution market. There's going to be the market or a different scheme, but we'll take into account the geopolitical situation, security. A lot of things are happening now. You know what's going to happen in the month or 2, 3. There's a demand on the capacity side or other prospect that may turn up. So it seems to me that the development of such a model and maintaining commercially such unit in exchange for declared specific plans regarding the construction of those gas-fired units we are talking about, that will be a very interesting solution for us, because we have this continuity of operations. So on one hand, we are building assets in the form of a gas-fired units, energy storage facilities, so building this as an entire system, and in the meantime we have still operation or functioning on an ongoing basis in another different technical way, guaranteeing the ability to take advantage of those units. Talking about this spinning reserve or some kind of reserve, different names could be used depending upon the technology and the needs. That would give us a chance to build, maintain security. On the other hand, also transition the entire part related to the human resources, because there's an opportunity to take advantage, to use the human resources to take part in the construction, shutting down. It's an interesting project that, thanks to that, could be put in place. If I were to make a choice, I would choose something like that, to building the future, maintaining the security here now, from my point of view, would be an ideal solution. What will happen, we'll see. For us, this capacity market mechanism is of critical importance. We are beginning to work on that, because for 2 or 3 weeks we are working on 2027, because the capacity auction, whether it comes in June or September, but first thing is we have to prepare take part or not take part. We have to economic justification to take part and submit the bid. I assume it's going to be a price taker's market. That's one element. Second thing, if we take a decision that we take part in the capacity market, then we have to, with the optimization efforts, to increase the probability of winning the capacity market auction. So there's a big challenge that we have in front of us. Let me just tell you that we've been doing it for several weeks now. Let me just add regarding the substitution, capacity substitution. We took part in the consultation process carried out by the Minister of Energy in developing certain assumptions for the system, so that you could confront it with the European Commission. We are saying that we meet those criteria based on what we know. So speaking directly, we want to build, instead of liquidated conventional units, gas-fired units, and the substitution mechanism make sure that this event can happen, is feasible. Until the time the gas-fired unit is built, the conventional unit gets the financing for a certain part of its cost, and the regulator makes a decision on which part it is. So that is the mechanism. Our intention is that we get the legislature regarding this area comes up before the second edition of the capital market. If we assume the national continuity, that next year in September there will be a certification for the 2030 auctions under a new mechanism, but those mechanisms are a bit separate. So one can imagine that in our gas-fired unit that we want to build in 2035 is taking part in this auction, but also we can imagine that gas-fired unit is taking part in this auction built in place of a liquidate, of a shutdown unit. Will give us an opportunity. The substitution mechanism is already implemented in place, would enable maintaining in the capacity deficit 2030 time frame, will enable maintaining a unit that could provide support for the energy security in this location, this hub. Excuse me for explaining it in a complex way, but a very important mechanism, what you said, for us and for the power sector in general, I think. Thank you very much. Any other questions from the audience? So let's move on to the questions asked online. Some of those questions repeat, so let me read the ones that are new ones. The first question what is the criterion for maximizing the expansion investment project in the distribution segment? In case of a 5-6% cost of capital, the decline of WACC for a premium for investment up to 8% to justify the maximizing of investment efforts in this area. Ladies and gentlemen, I think that it's worth remembering one thing: those investment projects in the distribution line of business, these are not on paper. We are not building any empty buildings, anything like that. But the process goes like this: that we'll talk to the regulator, the efficient transition of the grid card was approved that indicated certain investment needs and the mechanism of compensation for those capex. So we can see that from physical point of view, there are needs for investments, both strengthening the grid to make it more flexible. There is more variability with the renewables production. This grid requires investment. It's growing in age, and from the upgrade refurbishment point of view, there are certain needs due to the certain historical legacy. So it's needed, required from the point of view. Regulators saw it as well. So propose a certain compensation or premium for investment and for. So we are functioning with this mechanism in place. The grid requires investment, and for that investments to take place, the compensation must be sufficiently attractive, and this mechanism is aimed at reducing all those historical legacy difficulties. And from the security point of view, the grid is key importance regarding the security of the operation of the power system, both at the physical level as well as to a large degree the military level. So we can see that the flexible grid that is robust, resilient, is of key importance for the system to expand, for the transition of energy sector to take place. If, as of today, the management board were to update the strategic objectives, what would happen versus the time of publication of December last year? Nothing. Well, with full determination as we deliver the strategy that we presented, we are fully determined to implement it. We can discuss whether to go more to the left or more to the right, but the strategy doesn't define it's not an Excel. It's a certain assumptions, faith in certain changes, certain actions. As we are showing every quarter and every day, with our own work, we believe in what we have written, and we are fully determined to carry it out. We are more determined, and we didn't write it in the strategy, just like a strategic option is, we're talking about the picking units. At that time, we already anticipated that it was going to be interesting business, so we can see that we're at that stage where we believe more and more, and we want to implement it. As you mentioned, that in this November, decisions will be made whether to take part in the capacity market, but in a moment it's going to be specific money behind it. So I think that we included in the strategy, we spoke about something like that the SMR is a strategic option. We are already taking part in the technological dialogue, we're discussing various solutions. So we do believe in this technology. We are waiting when we can go to the store and go ask for 2 SMRs, good morning, or do a tender for an SMR. So waiting for the time when we can trade, not just discuss. Thank you. Well, our talks conducted with the Energy Director Office regarding including the component of the National Recovery Plan in the WACC methodology for the distribution line of business. Do you expect WACC to be lower next year? We handle with unbundling, we know nothing of that. Well, we're not conducting to any Energy Regulatory Office in this topic. Regarding the second part of the question, we expect such a WACC that will enable us to implement our CAPEX projects. Another question, who are you buying from the remote readout meters? Let me start by saying that all contracts active as of the end of June, purchase procurement contracts, 99.7% contracts, with contracts, first of all from Poland, only a few from the European Union, and 0.3% of our contracts are from outside the European Union. They are related to the meters. Okay. Meters are selected by way of specific tenders. Regarding dynamic tariff, do you have a low profitability in the trading segment than from the entire tariff price? What implications we may expect regarding the profitability of the trading segment as the share of dynamic tariffs are growing? The margin is neutral, so the price in the dynamic tariffing is following the day-ahead market price. So if margin is linear, is added to each megawatt hour, so the number of megawatt hours taken advantage as a part of dynamic tariffs will not reduce that margin, or will not increase that margin either. So it's neutral. So we do expect that the number of customers will be rising, and I think it's an opportunity both for us and for the customers. It's an important thing that Piotr mentioned, that if we get engaged, if the society gets engaged, the customer on the other hand, there will be supply on our side, so it must be followed by technology. And that's why the AMI meters, that were strong investments of distribution, information on the consumption of electricity, those are big applications that we provide to the customers. So systematic education means that practically today, any household today, any company, systematically, because as of the end of the year, 50% of customers will have AMI meters. They know exactly how much electricity they consume. If you link it with the price of electricity at a given hour, we have everything at our fingertips. So we expect the new technologies will come, but the so-called smart home has already been implemented, but regarding the way it works, still a lot ahead of us. But once there's a big difference between the hours and the exact information about the consumption of electricity, new tools will come to being that will control the devices instead of us. For us, we do it ourselves, but any change, it requires some change, some time. If I'm expecting a D-Day, everything will happen in a single day without the involvement. Our involvement, it will not happen. For us, for now it requires our own behavior, our own involvement, engagement, but in some time technology will provide support, but competition is the best solution, so it'll all happen quickly. Thank you. Coal assets are written down to zero today. I partly answered this question. As I said, at the unit level, all the shares in the conventional generation line of business are written down to zero. However, versus the consolidated statements, the answer is no. The main part being Nowa Jaworzno, and the total value of all these assets, coal assets in the group, is about 2.8 billion PLN. What contribution to the EBITDA in the generation came from the energy buyback, electricity buybacks, and the sales on the balancing market? How much did it come in the second quarter of 2025, the effect on the electricity buyback and the balancing market in the generation and renewables? I don't have data regarding quarters, but for the first half, we earned on electricity buybacks about 200 million PLN. Let me remind you that the electricity buybacks are taking place due to the lack of availability of the units, and they have a contract that can transfer it to a different unit, or in the situation where variable costs are higher than the electricity price. And these are the cases when such buybacks take place. I don't know, about 1.7 terawatt hours we bought back in the first 6 months. I'm talking not only about the TAURON generation, but also the heat and renewables segments assets. Just to add, one must say that we're looking at this market in a comprehensive manner. You cannot just say that here it's better to sell, here it's better to buy back. Of course, at the end of the day, that's what we do, but it's a mix of different actions. Sale on time and then check whether it's buying back this electricity. Of course, the value of the spread on the buyback was declining because the prices were declining. So if the price is higher, then the room, even in extreme cases, zero negative prices, is beginning to get smaller. So respectively smaller space, but it's a mix of an impact, as I said, when talking about the generation earnings, where the generation earnings were impacted by the buybacks and the CDS margin on electricity sold, increase of the volume, and the results from the balancing market. And of course, in the Piotr's line of business, they're optimizing so that they can achieve this result in that line of business as good as possible. Thank you. The next question we have from Mr. Andrzej Rembelski from the brokerage house PKSA. In the first half of 2020, why did you take advantage of such a small portion of a cheap financing from the National Recovery Plan despite the positive decision announced in December 2024? What is the schedule of transferring successive tranches to TAURON? Answer this question the following way. First of all, we have this mechanism of refinancing, and this refinancing is applicable to any spending. First of all, we incur an expense in order to get any refunds. So it's not so the tranche is paid up front and then it's accounted for, but first we have to make an outlay and then to get the refund. In the first tranche, because we're looking at the differences between the energy groups, first tranche we had a relatively small amount. Some energy groups had relatively higher amounts. They could go back to 2022. However, there were certain exceptions. The exceptions were such that we couldn't use the funds that were any European funds. So since our group in the past was using a lot, partly the subsidies, but first of all the EIB funds, so we couldn't do a single large refinancing at the very beginning. So we can only take funds that we spend on a going basis. The funds that we spend going basis are also reduced, first of all, by the subsidies that I mentioned and the potential use of other EU funds. However, at the same time, they have a certain category that you can use. Such categories are included as transportation. Some things they are not eligible for those funds. But what we can say is definitely we'll substantially speed up the drawdown of those funds in the subsequent years, and the expectation of the first tranche, so the 11 billion that we signed a contract for in December, as we said, we tend to spend it within roughly 4 years. If we add to that this annex that we signed this year, so almost 16 billion PLN. So in total, we're planning to spend it or draw down those funds within the next 6 years. Because also a natural question arises whether there's a risk that those funds will be lost. No, because the maximum time frame is 2036 for use of those funds. So if we say 6 years before 2030, we plan to take advantage of all of those funds. Thank you. Next question. How much could be the effect on the regulatory round in the second half of 2025 and in 2026? Let me say as follows. It's a uniform distribution, so the effect, as you can see, it was almost 180 million year-over-year effect. We're talking about this effect, or 6 months versus 6 months, what we said, what we showed. So it'll be a similar distribution the subsequent 6 months. But as of now, we are not providing the forecast for 2026. Of course, one could try to do that because, as I said, it's a matter of going back 1 year back, because in 2026 we'll be talking about the 2024. But as of now, we didn't provide these estimates. I don't know. Probably we didn't make such calculations anywhere. Major capex plan regarding energy storage facilities for the coming years. What capex per megawatt hour one should expect today, and what capacities you are assuming, whether 4H on average. Regarding energy storage facilities, as one of the earlier beginnings, less than 1 million PLN per megawatt hour. In practice, our contracts for the first projects were in the region of 800,000 per megawatt hour, 830,000 PLN. That was the range for the small project that we have implemented so far. Regarding capacities themselves, capacity market required the 4-hour configuration. That's why 270 megawatts of project that won the capacity market are configured that way. However, in practice, this capacity could vary, namely depending upon whether it's a facility directly connected to the grid or co-located with a renewable investment project. Its function, its capacity may vary. However, such typical facilities, storage facilities work out better in case of today's limited capacity market support in the 2-hour configuration. In practice, the set of energy facilities, storage facilities will be implemented. It will be a certain mix between 4-hour, 2-hour, or indirect capacity with respect to the storage facilities co-located with renewable sources. Thank you. Another question. The request to comment on the words of Mr. Paczynska. Now, the nuclear power project, one should also include in that project the state-owned companies in return for the supply of electricity at preferential prices in the future. One shouldn't comment such statements, but someone's statements. But the topic is as follows: we are very open to build SMRs on the condition that such a commercial offer, technological offer is ready. Second thing is that we are very open to the PPAs. As you remember, in our strategy we are saying we are building our assets, our balance, but based on the project finances and it's ours. We are open to any type of forms of cooperation, so either under JV projects we can do it on a partnership basis. So that's okay for us, and we have it scheduled and planned, but we are also open to sign the futures contracts or PPA contract. We sign such a PPA contract on a very specific one. The goal is that 2040, 100% of electricity sold to our electricity should be green, cheap electricity, green electricity. Green understood not only renewable but also nuclear. That's how we presented it. Therefore, it's of coming up with a model how electricity generated by a nuclear power plant is sold. It's going to be under PPA, so on the exchange that's ahead of us. We can trade in various forms. If we can guarantee for our customers electricity that's climate neutral at the lowest possible price, then we can sit down at the table and negotiate. In connection with company earning, companies are planning in real terms the wage increases. We are praying for negotiations on wages. I will not comment on that because one of my colleagues could ask such a question. Well, good financial results and the growth of the company is a derivative of a strong cost discipline. So the compensation must be in line with the market, follow the purchasing power of us as employees, but also in inflation-related issues. But we have all of that in front of us. We definitely want to compensate our workforce in line with the conditions terms that we are offering for them, and to be a competitive employer and to have this to be named as the employer of choice, preferred employer. Minimum wages or don't have an impact. Well, always there's some impact, but it's not something that determines the financial results. So always has some impact, but those ties and majority of regulations are not tied to the minimum wage. Definitely we'll have to take this into account, the increase of the minimum wage, but doesn't distort the operations. It's not a major impact. As we spoke before about other parameters, but it's happening, but it doesn't break down the system. Everything is small, then it's beneficial for you due to the fact that it's lower increase than what you expected before. Let's leave it for now. We have negotiations ahead of us. The main element we're talking about is inflation. Is the main parameter that is our benchmark. Because one thing is to maintain the purchasing power of our workforce. So inflation is such and such, then We are trying to take this into account. And the second thing is the bonus success fee, and these are two different perspectives. So how to tie it all up. So people must know whether their work is appreciated, but the cost is here now, and we cannot guarantee that in the future, because no one can guarantee anything. But such a benefit due to the fact that we are successful in our operations motivates all of us to do our best, to be engaged in generating the company's results. The question seems to be a little bit quite important, because in our company each employee is tied on the managerial level of EBIT with one holy parameter. If we're discussing about results during the business review meetings, every employee knows that whatever happens, we have to deliver the EBIT, that this is the component builds the narrative and the way of thinking in our organization. Therefore, we're talking about the fact that on one hand, it's a purchasing power versus standard element. Second thing is incentivizing and rewarding the workforce for the results and encouraging them to generate more results. So it also has a impact upon what we do next year, because listen, we all have to get involved in our entire TAURON generation business unit to make a lot of effort to be able to take part in the capacity market auctions in the subsequent years, and to increase our probability to win those auctions. Without the engagement of all the people and allowing for changes, will not be successful. But I have a declaration from the social side that they will be strongly engaged in competing. So it's also a competition for jobs. So it's competition, so we have to compete. I'm trying to motivate everyone. Another question. Do you see a potential for reduction of a tariff below 500 PLN per megawatt hour in 2026? Do we see potential? Well, definitely I can see a potential for electricity price that the customers consume today should be significantly below 500 PLN. And the situation is such. I'm encouraging everyone. My answer is, we don't have to wait absolutely for the delegated decision for the legislature and so on. You just enter the www.tauron.pl, click on cheap hours, and you have it. So it's already happening. So I don't just see the potential, but it's already in place here now. 12,000, you said. It's a good beginning, good start. So I encourage to invest in our shares and also in that you use our products. Worth moving from Estonia, from anywhere, it's worth moving, switching on to you. I also encourage to also move to our area of operations. As Basia showed, the cheapest distribution have a double benefits, not only distribution, reliable, flexible, available, cheap, and green energy from us, excellent customer service, motivated people. What else can I say? Thank you very much. One more question ahead of us. Revenue from the capital market in the region of 340,000 per megawatt hours cover currently the fixed cost of operations. Let me answer this question. Well, first of all, we have to look not just at 346,000 per megawatt, because we're just only talking about the some of the units. We have the new Jaworzno, but already is taking part in the capital market for a long time, and 200 megawatt unit that Piotr mentioned. They're also part of the capital market. It's not a full calculation. However, if the slide we probably didn't have time to discuss, but it was close almost 1 billion PLN. Generation in 950 million PLN, that was the revenue from the capacity market per annum. It's quite close to the fixed cost for the segment. And you add to that the revenue from balancing market, then one can say that fixed costs are close to being covered. Of course, difficult to foresee what the balancing market will be in the future like, but major portion of fixed costs is covered by those costs. What Krzysztof mentioned, but with appropriate cost discipline, I think that we should be able to balance it within Siersza itself. So I spoke about the entire generation, not just Siersza itself, but the approach we had to the capital market auction this year is such that all the costs must be covered, plus the mandatory capex outlays that are related to the maintenance of those units. So we approach it from the cash outlays side, not from the EBITDA. So we have covered all the questions. We declare that as we are sitting here, we are at your service. So also after the conference, so I think you still now will close this part. We made it within 2 hours of presentation plus Q&As. So I hope that we have delivered on the task. Ladies and gentlemen, thank you very much. That's all for today. Thank you very much for coming, both here in the room as well. To all of you who have connected with us online, and see you during the next conference.